So when we think of the metaverse, there's a few obvious companies that come to mind. The no-brainer is Meta Platforms, aka Facebook, top of mind thanks to the strategic name change that they did recently. Then you have companies like Roblox, already seen as a great, successful company that's going to do really well in the metaverse. They kind of have a metaverse today with their in-game universe, so that's another popular name. Unity Software, that's another one you guys probably have heard of, a company that allows designers to create 3D models and objects for games, which essentially is what we're expecting in the metaverse. And finally, we have NVIDIA, the one that's going to be providing all of the chips required to run the data on servers somewhere in the world for this massive metaverse. These are the obvious plays for the metaverse, and the market has already realized this. We have seen some incredible returns in the last 1 month on these stocks, most of them being up double digits in a single month. The market has recognized these companies, slapped on a metaverse premium onto them, and while they have more room to run in my opinion, the appeal to chase these companies after this rally isn't necessarily my cup of tea. But what we do have here is a company that is potentially going to be huge with the metaverse, and it's going to help with the creation and development of the metaverse, and it's down nearly 25% in the last 5 days alone after suffering a 15% drop in a single day. Yes guys, today we're discussing the company Autodesk, and Autodesk is an extremely profitable, extremely successful, high cash flow business that I think the market is misunderstanding and mispricing here. So in this video, my goal is to dive into the fundamentals of Autodesk, explain what this company does, why it may be showing us some value here. We'll look at their recent earnings and kind of understand, what do they really play in the future, which is the metaverse. So if you want to see more videos like this, take a second, smash the like button, helps the channel out tremendously. Hit the subscribe button and share this with a friend as well who may be interested in the metaverse and wants to learn about some stocks that aren't necessarily the poster childs right now of the metaverse. So the first thing I think we should start off with is kind of two major tailwinds that Autodesk will be riding, which I think will help this company grow much larger. First, like we mentioned, the metaverse. Autodesk has a whole suite of products that focuses on 3D modeling and designing, with its primary focus being on architecture and engineering. But in the metaverse, this is something that is a perfect fit. 3D environments, 3D objects, 3D modeling. Autodesk will be able to deliver on all of this. Autodesk also does realize the potential to capitalize on digital content, and they have stated this recently during their Investor Day presentation with intentions to be a major player here. If this is our visualization of the metaverse, those buildings, those structures, everything you see in there could be designed by Autodesk software. It's funny because this company, designed their software to help simulate real-world structures and buildings and bridges and whatever, but all the simulations can just be taken for real world stuff and thrown into the metaverse, which I think is a pretty cool new use case for this company. So that's the first major tailwind that they're going to be riding, which I think will be kind of, a couple decades long. But the second one is kind of more shorter term, which we should see realized within the next few years, and that's around the infrastructure bill. This $1 trillion bill was passed earlier this month and will be focused purely on improving America's aging infrastructure. Now there's a lot ranging in this bill that Autodesk can help with, because like we discussed, their software helps to model and map out structures like bridges, for example, and this would imply that their software should see a lot more adoption in coming years. So like I said, this is a second tailwind. This one's kind of more shorter term, and I think Autodesk is in a very good position to take advantage of this as well. So we kind of understand now where this company sits, what it does. Now I think it's time to look at the fundamentals, because that is important here for us as investors. So like I mentioned before, I really like this company because it has high margins, it's highly profitable, and it's a proven business model. Adobe, interestingly enough, is a very similar business in terms of software tools, but they do admittedly have a larger market to cater to, so it is a larger company than Autodesk at over a $300 billion market cap. Autodesk, by comparison, sits at a $66 billion market cap, which, if it can keep executing well, should see phenomenal returns over the coming years. The company isn't some stupid high growth name, but it has respectable growth of 15% this year, which is expected to accelerate to 18% next year. I always love to see businesses that have accelerating growth because that shows strength in their company and their product and their services. And I do believe that this estimate with Autodesk doesn't account for the infrastructure bill at all or even the metaverse at all. So there could be a ton more upside that investors are not pricing in today. But the point I'm trying to make here is that it's safe to say that even if the metaverse fails and Autodesk doesn't become a major player there, or the infrastructure bill doesn't see a lot of money flow to Autodesk, this company still has a core business that's expected to increase their growth year over year, and that's powerful. Since around 2017, the company has been riding a strong wave of growth, but this has also made it a more expensive company to own, with price to sales sitting at around 14 now, which is near the top end of its range. Looking forward though, the price to sales should come down to around the 11 range, which is a little better. But here's the thing. Autodesk isn't some brand new company that's super exciting, SaaS, high growth, it's not like one of those new businesses that everyone wants to chase these days. It's a tried and true business. It has a proven model. It's mature. It's seeing decent growth, strong free cash flow. So I think that price to sales isn't the best metric to use for this. I think PE is probably a better way to go. So even though the free cash flow has been positive for this company and it's now pretty much at record levels of around $2 billion of free cash flow expected next year, the PE, in my opinion, still looks a bit expensive. Now, based on EPS estimates, the forward PE is sitting at around 37 to 51, kind of in that range somewhere. And this is if we're looking like a year or two out. And objectively speaking, that isn't cheap, like I said. That being said though, these software businesses command a higher PE than the market average, and we can see here that Autodesk in the last 3 years has been around a 50x or so. So technically, based on its own historical valuation, a case can be made here that Autodesk is starting to look attractive. These guys have gross margins of like 90%, and as we saw, they have strong free cash flow, and they have net retention rates around 100 to 110%. So that tells us that their customers do spend a little bit more on their products every single year. And these are all metrics that I think are things that investors look for these days, because these sort of recurring revenue businesses are very, very attractive for the long term. Autodesk, if you're not familiar, has also very sticky products. Like when someone gets trained on an Autodesk platform, one of their software suites, they typically stick with that throughout their whole career because it's just too much effort to switch. The alternatives sometimes are not better. Sometimes there aren't even any alternatives available. And they just kind of catered and cornered the market here. And I've seen that firsthand in many different industries where people use Autodesk software. It's just too costly for companies after they made the investment in Autodesk to try to switch to an alternative platform, which may be a little bit cheaper, because kind of industry-wide, Autodesk is the gold standard, and if you have training and certifications in there, you are a valuable asset. Now, in general, I would consider Autodesk a very wide moat company, a very difficult company to compete with, and it has very consistent profits and a long runway for growth. Now, the metaverse, the infrastructure bill, these could be things that kind of kickstart this company back into a higher growth mode. As we saw, their growth is accelerating regardless of this, but this just kind of could add fuel to the fire and see 20%, 30% plus growth, in which case this stock could see much higher prices in years to come. Now, Unity is a stock that I think is very similar in the sense that they provide software for 3D modeling, but it's more for gaming and that kind of stuff. But thanks to all the metaverse chatter and thanks to Roblox specifically, Unity has seen some great upside recently. The company is sitting at a $52 billion market cap, and while it's growing well, it's still not profitable, and they make much less revenue today than Autodesk does. So the question, is the market mispricing Autodesk here? Are they disregarding the fact that this company could be a big player in the metaverse as well? I think the answer is probably a yes. Now, in terms of the actual stock here, I think it's going to need some time to digest this big downward move that we saw after earnings. I don't think that the sell-off necessarily here is justified. Autodesk was a little bit expensive, but a 15% sell-off is a little drastic in my opinion. So I would not be surprised if the stock reverses and kind of reaches back to where it was before earnings by the end of this year, as long as the broader market cooperates. And I think if the broader market pulls back and we see a bigger correction in the market, this company will also get pulled down with every other stock. But if market conditions kind of stabilize and things start moving higher again, I think this company has some pretty good upside from its current price. Ideally, I'd like to see this in the low 200s. That would be some really good value in there. But even here at current prices, a case could be made like we saw with their PE that yes, it's expensive when you're looking at it by itself, but when you look at it historically and some of its peers, it's not too bad today. But anyways, guys, that was my quick, analysis here on Autodesk. If you found any value in that, let me know in the comments down below. Are you thinking of buying the stock? Is it a company you already own? Is there a reason why you wouldn't want to own the stock? I'd love to hear your thoughts in the comments down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.